Brent crude up 18%, the 10-year yield higher at 4.58%, gold quietly lower. 10 days in July, 3 signals, 1 collision. Here's what actually happened. MoneySpider, watching the financial web, episode 1, the Hormuz reversal, signals over narratives. Macro, the economy. Start with a number that looked like good news, June's inflation report. Prices up 3.5% on the year, well below the 3.8% expected, and the sharpest monthly fall in 6 years. Core inflation flat on the month. Weekly jobless claims came in at 208,000, better than forecast and falling. So June's soft payrolls report hasn't been confirmed by anything since. And on Tuesday, JP Morgan and Goldman Sachs posted some of the best quarterly results in their history. None of it moved the market much this week. That's the tell. When your best inflation print in 6 years and your best bank earnings in years both get shrugged off, something bigger is setting the agenda. Micro, the stocks. As mentioned, JP Morgan's profits rose substantially, 41% on the year. Goldman had its best quarter on record. Under normal circumstances, that's the story of the week. This week, it barely registered. Semiconductor stocks sold off on Monday as the blockade news broke, and the market's attention never really came back to earnings. 2 of the best bank quarters on record, and it was geopolitics setting the tone. Demos, the people. Consumer sentiment in June, 49.5, still looking fragile, though the share of people naming high prices as their top financial worry has stayed elevated for 3 straight months. Inflation expectations a year out easing slightly to 4.6%. But here's the catch. Every one of these numbers was collected before the blockade. Tomorrow's July reading, landing the same day as this episode goes out, is the first sentiment data that will actually have seen it. Polis, the state. 9 days ago, the ceasefire that had held since mid-June came apart. Trump declared it over on the 8th and 9th of July after fresh strikes on both sides. By the 13th, the US had reinstated a naval blockade of Iranian ports, and Trump floated a 20% toll on all cargo transiting the strait, calling the US the guardian of the Hormuz Strait. He reversed the toll the next day, swapping it for a vague pledge of Gulf state investment deals. The blockade stayed. Strikes have continued on both sides through the week. Watch the toll flip-flop for what it is, a headline that came and went in 24 hours. Watch the blockade for what it is, the thing that didn't reverse. Flows, capital movements. Brent crude, $72 on the 5th of July, above 84 by the 16th, an 18% move in 10 days, on a genuine choke point threat, not a headline flinch. The 10-year drifted up alongside it from 4.49 to 4.58. And here's the one that should make you pause. Gold drifting towards $4,000, not away from it. Gold is supposed to rise when missiles fly. This time, the market decided the rate story, oil-driven inflation, risks keeping the Fed rates higher for longer. That's a tell about what the market thinks is temporary and what it thinks isn't. The tension map this week, look at what actually moved. The Fed hike odds are fairly flat. The 10-year, a gentle drift upwards. Gold, a gentle fade. Consumer sentiment, we're still waiting for fresh data. And Brent crude sitting quietly with everything else for a week and a half, then breaking cleanly away the moment the blockade was reinstated. Master signal, the Hormuz reversal. So here's this week's signal. Not a new fracture, the same one hit by a shock before it healed. Cool June inflation said the price arm of consumer fracture was mending. 10 days later, a blockade and a toll that lasted about a day pushed up oil 18% before that relief had time to reach anyone's shopping trolley. We're calling it the Hormuz reversal. MoneySpider, watching the financial web. Systems matter. Systems leave signals. Until next week, keep watching the web.